In this video, I'll try to quickly go over some of the financials because this was the beginning, and we'll cover the financials a little more deeply when we see that after 2 years what happened. So revenue streams was very simple, selling a 1995 product and the 1495 brush to clean the grout. And the LTV, lifetime customer value, there were a few plans in place to improve average purchase prices and lifetime customer value, like selling a package, for example, 2 bottles of the grout cleaner for $39.95, and then the brush came for free. That was a way to get customers to spend more immediately. And then the idea was that long term, this was the best cleaning solution, and when the first bottle ran out or the second bottle ran out, customers would come back and get more of the same product because in fact this was the best thing that was available for this task. There was no other comparative product. There was only a way to go down in quality. Now I'm going to quickly cover the cash flow statement for prior to starting. The expenses were very few. A little bit of legal fees and website creation, creating the packaging, a labeling design, product creation with the chemical company. That was the bulk of the expense. And then buying up some initial inventory. So you see total expenses. For a new company, this is not insignificant. You'll say, well, of course, it's insignificant to startups that need $1 million or things like this. But for a person to put up their own money, not knowing what's going to happen, this is not insignificant. So, there were some expenses. It wasn't easy. So it started with a big loss. And there was no revenue to offset that loss. It was all loss, stress, pressure, all our friends that we know well that we encounter when we start our businesses. The income statement, just the business hadn't started. We'll cover that later when we cover the business plan 2 years later. A little bit about the profit. On the $20 sale, it just takes $5 to produce the bottle. So the $15 gross profit, operating profit is a little smaller because we have to take an account into other costs that go into it. So the actual profit is a little smaller, but still relatively significant per sale. And that's what we came up with. Very, very simple math. Like this is not complicated because we only are really selling, even though we're also selling the brush. Here, the finances are only for the grout bottle, but really it's just one grout bottle. There's not a lot going on. It's very minimal. And a lot of it is estimate too, because who knows at this point how much website maintenance there will be, how much other expenses there will be. Some things are really up in the air. These are largely approximations. But what's clear is that a sale of a bottle makes reasonable amount of money. It's not pennies. It's not 25 cents. It's, almost $10, give or take a couple of dollars, still pretty good. Just have to sell the bottle. That's really the key here. That's apparent. So the margin is there. We have a healthy margin. Even if you decrease it a little bit, it's still not terrible. It's fine. What you'll find is we have some pro forma revenue forecasting. And revenue forecasting for a business that has not started is notoriously faulty. I mean, when you start a business, you can make $1 billion or you can make no dollars. It's hard to tell. What we ended up basing our projections on were online tools like the Google keyword tools that tells us demand and the Jungle Scout tool that tells us Amazon demand, as opposed to the Google keyword tool tells us Google demand. And we saw what the search was on Jungle Scout. We saw what the Google tool was giving us, and it's kind of similar to the calculations we did when we calculated the market size. And what we decided was that in the first year or so, we'll probably be able to do somewhat well on Amazon, somewhat well on Google. And we saw that if we were to dominate on Amazon and do okay on Google within a year of execution, then we'd make $26,000 a month almost. So that was our pro forma revenue projection, and it's healthy enough. Like this was a good goal. And the last thing you can see is the balance sheet is very bare. There's almost nothing. Like there's no equity, there's no liabilities, there's very, very minimal things. I mean, there's like a little bit of fixed assets of inventory. There's a little bit of like intangible assets and intellectual property. but nothing really that makes or breaks a big difference. So the finances here are nearly negligible, but you'll see 2 years later, this really changes. We'll see that later in the course. For now, this actually ends the business plan for when the business is, before the business has started. We've identified how we're going to promote, and we've got our initial inventory, and we've got a good product. If you think about the 3-sentence business plan, essentially in the 3-sentence business plan, we could have covered all the major, most important things here. How are we going to promote? What's the product? How are we going to make money? We could have covered all these details in a 3-sentence business plan if we just focused on only the most important things. These are just elaborations. It's kind of like what Einstein says. If you can't explain it to a 6-year-old, you don't understand it yourself. That's a famous quote by Einstein, and this is the kind of the case of the 3-sentence business plan is, yeah, you really can explain the entire business. Maybe not every detail in the business, but the details are not that important typically, as long as you've got your major strategies right. But once you've got your major strategies right, it's not the plan, it's the execution of the plan that's going to actually get you to the results. And in the next videos, what we're going to talk about is what happened later. What were the challenges? What were the successes? What were the fails? And you'll see that it's actually all about the execution. The planning is ideal. We identified all the ideal strategies. Now it's time to do the work. So in the next videos, that's what we're going to cover.